Wall Street saw its worst day since 2022 this past Monday in a global market rout. Some of the losses were recouped as the week moved on, but many are wondering what comes next. So joining me now, Robert Wolf, a former economic advisor to President Obama and a Fox News contributor, and E.J. Antoni, public finance economist with the Heritage Foundation. Welcome to both of you. Glad to have you with us. Let's talk about what the data says this week about what we saw. I want to start with this from USA Today. USA employers added just 114,000 jobs last month, well below expectations for 175,000 gains. Unemployment rose 4.1% up to 4.3. That's the highest in nearly 3 years. They go on to say that one gauge tracking the rise of unemployment signals the U.S. could already be in a recession. Hiring has dipped below pre-COVID levels. Meanwhile, manufacturing activity shrank in July, falling to an 8-month low. Consumer spending, the economy's main engine, is slowing, and credit card debt is at a record high. Robert, that does not sound like a good collection of information.
Well, Shannon, thanks for having me on, and I know we're going to discuss a lot of those points. I would probably flip it completely. We've had 43 consecutive months of jobs growth. And to be clear, over the last 2 years, the Trump team and even EJ from the Heritage Foundation was working on Project 2025, and now they're sprinting away from it. The Biden-Harris administration, as you know, they passed the infrastructure policy. And look what we've done. We've had manufacturing gains over almost 800,000, big private sector investment, and factory construction at record highs. And don't take my word, just look at the projects: the Arizona chips plant, the Georgia battery plant, the North Carolina semiconductor plant, Wisconsin data center. Yes, last month was below expectations, but we've had 14 million job gains since this president has been in office. And we also know that we've had better GDP. We've had better economic policy. And yes, inflation has been a long tail problem for the country, but that's a global phenomenon, both on agriculture and energy.
Let me bring EJ in here. So I know that's something we talk about a lot, 14 million jobs. We know a lot of that was rebound, jobs added back from the COVID pandemic. But what do you make of what Robert says about your work and about, a view that is somewhat more pessimistic being inaccurate when it comes to our economy?
Well, I'm certainly very proud of the work we've done on Project 2025. We've made a lot of really great conservative recommendations for the next administration, whoever it may be, and we hope they take us up on it. But in terms of the job market, one of the things we have to remember is although we continue to see payrolls rising, the number of people actually employed has been falling. It's actually 600,000 below where it was back in November of last year. So the labor market is not all well, certainly not as well as it seems, I would say. Yes, we are seeing unemployment tick up. We're seeing literally all of the net job gains from the last year not go to native-born Americans, but going to foreign-born workers. That's a trend that has actually been going on for the last several years. And in terms of GDP, yes, it's true GDP is growing, but it's essentially growing because of government debt. Under the Biden-Harris administration, we've increased debt by about $7.2 trillion. The Treasury has drawn down its cash balance about another trillion. So that's about $8.2 trillion in the red. And what did we get for it? About $6.6 trillion in GDP growth, down to 2.2 if you adjust for inflation. Essentially, it's a debt-fueled spending binge that gave us 40-year high inflation, record high credit card interest rates, and a tripling of mortgage rates.
How does that end?
Not well. We can look back at different points in our history when we did essentially the exact same thing. The 1970s, unfortunately, was a very good example of this. And the result was back-to-back recessions and mortgage rates that eventually hit 20%.
All right, Robert, we're going to get a lot of economic data this week. CPI inflation coming out Wednesday, retail sales Thursday. Friday, we'll get that University of Michigan consumer sentiment survey as well. What are you going to look to tell you where we're moving forward?
I mean, listen, we saw the stock market get hit and the world was concerned. But, in 1987, I was at Salomon Brothers. We saw the Black Monday crash, and you saw what happened the last few days. One, the stock market came back. And we should be clear, that was a 1,000-point swing, and it was a big swing. We had 2,000-point downturns under President Trump, the 3 largest in history. I would also say the idea that the Heritage Foundation is also fiscal conservatives all of a sudden, I mean, come on, that's complete BS. They were touting the Trump tax cuts and that it was going to pay for itself with 5% GDP. My buddy Steve Moore couldn't wait to talk about it paying for himself. They had $8 trillion in debt in a 4-year period, the most in the history of a president. It went from 20 to 28 trillion, and the deficit ballooned. So this idea that all of a sudden heritage is worried about fiscal conservatism, we should just reflect on what really happened during the Trump administration.
Okay, and very quickly, EJ, want to give you a response to that because it came up with our last guest too, that these tax cuts under President Trump benefited the wealthy and they haven't been good for the country.
Well, it's interesting because all of the different news organizations that did an analysis on the Trump tax reform found that middle-class Americans had a lower tax burden after the reform was passed, not more. And in terms of the very wealthy, especially in high-tax states like New York, New Jersey, Illinois, California, those individuals actually paid more because although their top marginal tax rate was reduced, they lost deductions under that tax reform. In other words, it got rid of tax loopholes. And apparently the Democrats now want to get rid of that because doing so would be a handout to their donor base, again, in those high tax blue states.
All right, I feel like I could do an hour with you two, and this conversation is just beginning. So please come back because I think there'll be a lot more for us to debate in the coming months. Robert and EJ, thank you both.